The stock market got real intense last week. Thursday was the biggest blown gain in markets since April. If you're feeling it, we are right there with you. A lot of our favorite names are getting hammered. AMD, Meta, Micron, and of course, Nvidia, who on Wednesday night reported their Q3 earnings, sort of kicking off all of the drama here. Speaking of Nvidia, their CEO, Jensen on that call said, quote, "There's been a lot of talk about an AI bubble. From our vantage point, we see something very different." Apparently, the market didn't agree as the stock slid about 7% on what was a fantastic quarter. The key part of that statement is their vantage point. We wanted to dig into exactly what that means. Let's talk about it. Nvidia continues to experience astronomical growth. For example, they just crossed the $50 billion revenue marker in Q3 and are forecasting more than $100 billion of revenue per quarter into 2026. Their current and future tech is amazing, no doubt about that. They own upwards of 90% of the market, have a super lean supply chain, and there's basically no other game in town, although we are rooting for AMD. Demand for their products is off the charts from both companies and entire nation states, so of course things look great from their vantage point. To be fair, they do spend a lot of time acknowledging the value that their customers like Meta or Eli Lilly are getting from AI run through Nvidia products. However, the risk to Nvidia, and we touched on this in the earnings preview, that they're not really talking about comes in the form of the risks associated with their customers. So for example, their customers are now taking on significant debt to continue to pile money into AI infrastructure. That's something that you should be watching really closely. That debt is now making its way around the banking system, and without getting too deep into the weeds here, is basically making the bet that AI will pay off even bigger with more potential downside if it doesn't. That's ultimately why you see the stock slide on a very strong quarter and why we're seeing markets pull back a little bit here in November. Okay, specific to Q3 earnings, Nvidia delivered a really strong quarter across pretty much all metrics. The key takeaway, though, in our opinion, was the fact that they doubled down on the $500 billion of forecasted revenue coming by the end of 2026. They delivered about a 4% revenue beat, coming in with $57 billion versus the 54.8 expected. Earnings per share beat by about 6.5%, coming at $1.30 versus $1.22 expected. We're looking forward to what unfolds this week. Of course, a short week with Thanksgiving, but we'll be with you every step of the way. Appreciate you all in the Wall Street Game Notes community. Be good.